Hello friends, India's most loved supermarket that is nothing but a DMart is going through a rough patch. From last 1 year it is falling a lot and it has fallen almost 40% from the top. So today we are going to discuss about DMart that is nothing but Avenue Supermarket in detail. We'll do a complete stock analysis and I am going to tell you both fundamental and technical about Avenue Supermarket in detail, and at the end we'll tell you whether to buy, sell or hold at this level because it's already fallen. But many of the retail investors are getting confused that what to do at this level. So I am going to give a complete clarity today. So stay till the end. So friends, hello and welcome to my YouTube channel. My name is CA Tapan Doshi and I welcome to my YouTube community, and just click the subscribe below link. Now guys, let us go and understand about Avenue Supermarket in detail. So if you can see an Avenue Supermarket, at the end of the day, if you talk about Avenue Supermarket, it is one of the most successful supermarket in India. And the way it has from last 10 years, from the day it has come the IPO, the way it has performed very well. But there are some rough patches from last 1.5 years, and that we are going to talk about in detail. And basically, if you see Avenue Supermarket, it's been there across India, and the way it has performed, it shows that yes, people do believe in this supermarket and they do go and do lot of shopping. But nowadays, talking about the financial angle and how the stock is going to perform over from here, that we have to see, because when it came in IPO, it gave an extraordinary return for next 10 years. But now we have to see whether this type of return is going to be follow up in the same way or not, and that is what we are going to talk in detail. Now talking about in Avenue Supermarket, it has fallen 40% from the top. If you talk about, the top was almost around 5,900 level and now it is around 3,800 level. So it has fallen almost 40%. Now this is a big fall, and now from here, no, the main question arises, no, whether it is going to get stabilized from here or not, and that is what we are going to talk in detail. Now talking about Avenue Supermarket, now what we are going to talk in detail, the stock analysis. First of all, I am going to tell you why there is a big fall, what are the reasons behind it. Then I am going to talk about what are the positives about the stock, and like current operations and fundamental point of view, everything I am going to talk about it. Then I am going to talk about what are the challenges the Avenue Supermarket is going to face from here, different challenges from the competition, from also in internal challenges what they are facing. Also we are going to talk in detail about the valuation. Also we'll give the future estimates also about the next 2 years to understand what is going to happen for next 2 years. And that is what basically, see, understand, unless you don't know the future projection, you will not able to understand how it is going to perform from here. Again, we are going to see the technical charts also about a new supermarket to understand where it is lying, price volume action, to understand whether is the selling or hold warranted from here. Okay, and at the end of the day, I will give you my judgment what to do with the Avenue Supermarket. So ready? So let us start with the what are the reasons for fall related to Avenue Supermarket. Now talking about the reason the fall, the first and foremost reason was nothing but the high valuation. Avenue Supermarket was having an extraordinary valuation. If you've seen the Avenue Supermarket, P ratio has gone above 100. At this level now, it is very difficult to sustain about 100 level. Of course, the stock has performed very well because over the years the Avenue Supermarket has given a great growth, and Radhakrishnan Damani, who is the founder of Avenue Supermarket, has actually operated this chain very well. Radhakrishnan Damani, he is the wisest investor of India, and he is the guru of Warren, sorry, not Rakesh Jhunjhunwala basically. And that's why the way he has handled the whole supermarket chain is commendable, and the way it has performed also, it is great because it is providing a value products at a and also value production, but also it was quite profitable over the years. But as a result, no, there was always a high valuation given to the stock, and that is what is coming to bite it. This high valuation, no, as a result, no, there is a fall in the market, and that also has fallen. And globally, if you see, the second reason is nothing but global major retail companies like Walmart and all that has also fallen by almost 25 to 30%. So in India also, the Avenue Supermarket fallen in the same lines. Of course, the after COVID, there was a big rush in the market price of Avenue Supermarket, but now again it has fallen from last 1 year, and it is in line with the global peers. So yes, one of the reason is that global overall, if you see big retail companies has fallen a lot. The third reason is nothing but FI is reducing the stake from DMart. Of course, because they understand, because there is a global recession fear in US and Europe, the FI are going back, and when they are going back, they will always get out from a stock which is having a very rich valuation. In that point of view, you also know that no, as the DMart stock P was above 100, no, it was having a very high valuation. So of course, there is a stake sale of almost from 10% to almost 8.6%. That is also one of the reason why the stock has fallen, because continuously there is a sell in FII. Also, gross profit margin from last 2 quarter is quite at a lower level. Means it is at a reducing level. No, slowly and gradually the margins are shrinking, and that is also one of the reason, because there are multiple reasons why the margin are shrinking, that we are going to talk in detail afterwards. But yes, gross profit reduction is one of the reason. Another is declining store additions. No, basically high real estate prices, no, actually put on a break to DMart, no, for the store expansion. You also know DMart always buy the stores and do not rent the property, correct? They do not take it in a lease, on a lease, and they normally buy. And as the real estate prices are high, there is a little bit break in the store addition level. Increasing competition from the online retailers. You know, there are so many retailers coming, and no, they are giving the delivery very fast, like no Blinkit, okay, now India Mart, and again no, there are lot many others, no, which are coming. Even if you talk about this Big Basket and all, these are retail companies are giving in, basically online companies are giving a stiff competition to the DMart. Again, the another last reason is nothing but the online presence of DMart is slowly and gradually increasing, but not in a way the way the e-commerce guys are increasing, because see, understand now this lot many venture capitalists are funding this Blinkit and all this type of e-commerce retail companies now, because even though they are in a red, but they are being funded very well, and as a result, no, they are giving a stiff competition to company like DMart, and that is also one of the reason why it is falling a lot. So these are the main reason why it has fallen. Now let us understand what are the positives in DMart. Now talking about the positives, no, if you see here, there is a continuous corrective measures to improve store productivity in DMart. As I told you, Radhakrishnan Damani always focus on increasing the productivity, and that is why the main focus is also given that how they can increase the productivity, and their management is trying to best to, because see, over the years they are able to sustain in this leadership position because the way they handle the stores and the productivity, and so it is always on a higher side. Again, another point, best point of DMart is nothing but no, actually they take source at a cheaper level and they sell at a cheaper level. So when they buy, of course it is at a wholesale level, and normal whenever they are doing a payment, they pay it very fast. Okay, so the payment actually no, it's for the for DMart is 8 days. However, if you talk about no, like Reliance, Eaton, all that is almost 21 days. So you can see the gap between the between DMart and the competition. So it is quite on a higher side, and that is why that is benefit they are getting. Again, they have their own store and they not take stores on lease. Now understand, when they do take stores on a they buy, basically whenever you buy a store, no, you are basically saving the complete rental part, and that directly added to your profitability level. So that is a plus point for the Avenue Supermarket. They always buy us property, and that is why they are actually saving a lot in terms of rent, because see, whenever you go to a property, which is on a high end, you have to pay big rents. And again, once you buy a property, the another benefit you are getting is now that there is a property price appreciation benefit. So whenever the prices goes up, of course they are getting the benefit of property price appreciation also. That is also coming good for the Avenue Supermarket. Another point is now that store size is getting better and better. So just recently the management told that they are going to operate stores with a much more, the size will be much more at a larger level, bigger level, and hope they will able to add the productivity. But somehow it may go to negative also, that we are going to talk about during when we are going to talk about the challenges. But yes, the positive is they are going to increase the size of the store, and that will help them to bring more and products. Okay, another point is they are going to bring a pharmacy stop within the store. If you see, I was there in Dubai and for 10 years, and I've seen that time store pharmacy and all that stores are within the Lulus. And I was there. Lulu is one of the important supermarket, one of the biggest chain in Middle East. They having a pharmacy and all that within the store only. So similarly, DMart is also trying to bring pharmacy within the DMart store only. So that is also one of the positive. Again, guys, slowly and gradually, but yes, their EBITDA is getting better and better. Of course, they are saving out the rental part, and because less debt is there, they are not taking less debt, and that is why their EBITDA, they worked a lot on EBITDA, and that is getting better and better. So these are the positives about DMart. Now let us talk about what are the challenges that DMart is facing. So talking about the challenges, the first challenges they are facing is that basically their SSG stores is less due to the high inflation. Now what is SSSG? Now SSG is nothing but same store सेल्स ग्रोथ इन द लास्ट ईयर. ओके, यानी वही स्टोर का पिछले साल के साथ कंपैरिजन में कितना ग्रो है. दिट इज नथिंग बट LFL स्टोर्स. ओके, सो LFL स्टोर्स सेल्स इज गोइंग लेस. आई एम नॉट टॉकिंग अबाउट द न्यू एडिशनल स्टोर्स. आई एम टॉकिंग अबाउट द सेम स्टोर लास्ट ईयर. How when you compare with them now, how is the growth? Okay, now that is coming less. So LFL growth may be less between 15%, 5%, 2% for quarter 2, 3 and quarter 4 estimates. Okay, so आप देख रहे हो there is a continuous reduction in the LFL sales growth. Now that is a challenge for the DMart. Now talking about same thing, if you can see here, you can see here that the sales growth. Okay, it was there around 64.2 earlier, which has gone down to almost 14.8 in the financial year, second quarter financial 23, then in financial year 25, and now quarter 4 it go around to 1.6. Now this is what, now from 64.2 going down to 1.6, that is around 2, which is very less. Correct. So that is a negative impact. So same sales growth should not come so much down, and that is going negative for the company. So that is SSSG growth. You always have to keep in mind that is nothing but the LFL growth. Now other challenge with the DMart is facing is that their annual revenue is still below the pre-COVID level. Now this is very important to understand. You know that before corona, the pre-COVID level was quite good. Now if you talk about that level, now if you see annualized revenue per square feet, okay, now here if I show you, you can see around 2020 this level. No, it was around average around, it was around 40k aspas down, but still now it is 31.7. okay, so it is not able to cross the earlier pre-COVID level. So that shows that basically DMart is not able to increase their revenue per square feet. Now there may be because of the competition, so many lot of things are there, but yes, this is also going negative for a company, as it is basically it is going down. So from 40 to almost 31.7, that is quite a dip, and from last 2 years it is not able to go up, and that is what you have to understand here. Then comes the another challenge. Larger size store may have a small revenue ramp up. Now as I told you, in the positive side that they are going to increase the size, but no, it does not mean that because they are increasing the size that average uh, sales per square feet is going to increase tremendously. It will take time to increase because more and more products will come and the crowd is same. So it will take time, but that you have to always keep in mind. Another challenge they are facing is that quicker commerce players gaining in revenue share through economic uncertainty. Now, these are like no Blinkit and all these guys, no, like no Big Basket and all that. They are able to deliver the product within the 10 and 50 minutes. Now, let me honest with you, like me, my wife is always no keeping an order in Big Basket or no this type of no quick e-commerce no for the vegetables and so many things no. So that is actually helping. Even Blinkit is coming to our home. So because of convenience which the retail investor is getting and retail customer is getting, they are ordering more at a quick commerce level. So that we always have to that it is a biggest threat to the demand going onwards from here. Another point is demand. What is that is quick commerce players decent geographic overlap. So wherever demand is there, no, there these quick commerce players are available. And वो big cities की मैं बात करूँ, there they are giving a tough competition to demand, and they may take away the share of demand in future. So that thing also you have to keep in mind. Now talking about all the challenges, now let us talk about no this Blinkit quick commerce GMV. Now gross merchandise value I am talking about. Now if you talk about Blinkit, no, you can see here it has gone up from in quarter one financial 23 it was around 11.7. It has gone up to quarter two financial 23 to 14.8, and in quarter three financial 23 it is almost 17.5. So there is a quite a jump in GMV. That shows that even Blinkit is able to take away more and more market share from a player like DMart. So that they see, now you may say that whether they are profitable, non-profit, that's a different thing. See, these are all funded by the private equity player, venture capitalists. They have enough fund with them, and their main motto is not to increase the size of a company. So that is what this is giving a tough competition to the DMart. Now let us understand the various main ratios. Okay, now main metrics of the DMart which you have to keep in mind, parameters you have to keep in while analyzing. Now talking about this, if you talk about again, I have given the financial 24-25 estimates also. Now if you talk about year-on-year growth, okay. Now if you if you see year-on-year growth, the revenue growth is around 24. Then in 2021 it was -3 because of COVID. Then it gone 28, 38. But then you can see there is a drop in revenue. Okay, for the next 2 years, these 2 years. Okay, now this is coming at a lower level, and that is where no analysts are projecting that next 2 year will not be a big for Avenue Supermarket. Even SSG got same sales growth I told you, no. So you see from 17 it may go down to 8% and 9%. So that is also negative. It shows that same store may not be actually performing same way in a better way in future, and that is what no basically it is coming against the Avenue Supermarket. Now if the same growth which is there in the past is not able to grow in a faster manner, no, then it is see, at the end of the day, 80 to 90% revenue is coming from the same SSG growth only, and they are not able to perform. It will have a dent on the profitability of a company. Again, gross margin will remain same around 15% in next 2-3 years. Of course, it is increased. EBITDA margin, as I told you, in 21 it was 7.2, which has gone up to 8.1. Now it is around 8.6. Again, 24 and 28, 5 estimates around 8.6, 8.9% only. Talking about store count, guys, no, initially in 2021, no, there was a no count were less. Actually, the new addition store were less, 20 only. But then in 22, it is a 50, 40, 55, 60. And this is what the company is saying that in future they are going to increase it. Now, talking about capital expenditure is 26,000 was there in the 2022, 27,000, 34,000, 40,000 respectively for the next 2 years. So these are the important metrics you will come to know. But the main here the criteria will become is then here the SSSG growth is going less, and that is what we have to understand. Talking about now valuation of a company. Now talking about the valuation, you can see here we have given the last almost no 10 years data. Now if you talk about last 10 years data, over the years net revenue has increased a much better way. Now here one thing you have to understand that in 2020 it was 241, then 309, 428. Okay, now it is increasing slowly and gradually. But one thing you have to understand here is that EBITDA is increasing. As I told you earlier also in the last chart that yes, slowly and gradually EBITDA is increasing. Depreciation and all that is at a constant level. Now talking about EPS also from 22 is 23 to 37.3, 42.8 and 55.7 in the next 2 years. So slowly and gradually it is going to increase. But is it going to increase at the same level? The P ratio is there. The P ratio is much more on a higher side. As you know, it is around 100 P ratio. Now that is where no the problem is. Now, even though the growth is there, but is in the same level the way the P ratio it is. Now that is where there is a problem that P ratio बहुत ही ज़्यादा है and the growth is not so high. And if the growth is becoming lower, as I shown you the earlier side, then whether this P ratio is sustainable or not, it it may come down, and that is where there is a big fear, because if it comes down, no, then there will be a big fall in the stock price, and that is what you have to understand here. So P ratio plays a very, very big role here. Again, all the key ratios as we talked earlier. Now let us go through the key ratios again. These are the main key ratios. Talking about revenue growth, as I told you, no, it is slowly and gradually it is going lower. EPS growth, if you see here, 2022 and 2023, it was an exceptional no, 35.7, 61.7. But now for the next 2 years, it is quite low, 14.8 and 29.2, now which is on a lower side compared to last 2 years. So that may go against the company. Again, gross margin has almost remained constant. EBITDA, as I told you, it is almost no slowly and gradually it is increasing. Talking about ROE, ROE was no earlier 21, 22 was 11.5, 21 was 9.5, but now it is 16.2, 15.9, 17.3 respectively for next 2 years. So that is manageable, that is okay, that is not a problem. But the problem comes here that free cash flow is still remaining negative. Correct. So that is also a problem, because free cash flow, if it is remaining negative, then that is an issue. But over there, if you see free cash flow as for the DMart store is always remaining negative. So one thing you have to understand from these metrics is that no, main problem comes at a revenue growth level. Revenue growth does not seem to be no good for the next 2 years. Now we have gone through the complete no fundamental of a company. Now let us go and understand the technicals of the company. Talking about the technical, guys, as you can see here, no, we have taken a weekly chart, okay, and weekly chart, and if you see uh, Avenue Supermarket in last no basically 2022 21 there was a high of almost, as I told you, 5,009, and from that it has gone down only. And if you see the cross also showing red signal, तो यहाँ एक basically consolidation level दिख रहा है. There is a consolidation level here, but still it is in a downtrend only. It is not going. So unless it shows a jump from here, I feel that no, it will not be a big no. See, because see, at the end of the day, it is getting a pressure from the FI also. As and when the DMart is going at a high level, there is a selling pressure coming, and which it shows that it is in a range currently. It is in a range now. Whether it is able to break this range or not, that we have to see. Just currently the market is down, so along with the market it goes up, but the way the competition is faced with the competition, that is the thing you have to follow here. Now if you see in the past, the way the rally came from 2020 no to almost 2022 almost, you can see here, no, actually it shows that yes, there was a big rally, and from almost you can say that यहाँ से almost around 1600 level it has gone up to 1500, because there is a big COVID push happening. People were rushing, and no, uske baad suddenly there was a big no boom in the retail all the retail companies and everything, and there was a big push, and from 1600 to 6000, so almost वो 3 गुना हो गया. But from here, from last 1.5 years almost, okay, the stock is not moving almost more than 1 year, and stock is not, and that is where the main problem arises. So what I feel from here is that the road will not be so easy for DMart. And my personal suggestion is that at this level, if you want to buy, you can buy, but I think it will, the way the extraordinary return that DMart has given over the years may not be sustainable from now here. The reason is now that a competition which it is getting from all these, like no gophers like Blinkit or IndiaMart or so many others are there, no, which are quick e-commerce guys, no, like Big Basket and all that. They are giving a very tough competition. Again, it is not so easy. World over, you can see people are much more no going to the online for the purchase and everything. No doubt DMart is rushing towards this segment, but still no, the competition will be high. So I feel that at this level, if you want to buy, you can buy, but the return, which will be the average 12 to 13% return you may get over the years, that exceptional return has gone away. And here, if you want an exception like 18-20%, I think DMart may not give. हाँ, एक दो quarter दे सकते, but over a time I don't think it will give. So my suggestion, don't buy at this level, and because the one of the main problem which it will face now, because of the high P ratio, the valuation is too high. If there is a dent in the growth, if they are not able to sustain the growth, and there is a drop in the growth, then the stock price will fall a lot, and that is what fear I am having. So at this high valuation, at least I will not invest. So my suggestion is not to invest for a long term for a year, unless there is a basically downgrading happening, or the P ratio comes at a comfort level and where you can invest, and the valuation also proper compared to its competition, because it is currently trading at a high valuation. So guys, this is my take. So hope you like this video. Then just type like, just click the like button, and also do write in the comment box, what do you think about DMart, whether you are holding or not, or are you planning to buy or not. So just type in the DMart or any other retail company you are holding. So thank you very much for seeing the whole video, and I'll see you in the next video.